I'm Matt Bishar with NAREIT.com. I'm here in Washington, D.C. at the Marriott Marquis Hotel for REITWise 2016, NAREIT's Law, Accounting, and Finance Conference. Joining me today is Sandy Presant, Chair of the Real Estate Fund Practice with Greenberg, Traurig. Sandy, thanks so much for joining us.
Hi, Matt. Good to see you again.
Now, can you start by talking a little bit about the current fundraising environment in the private real estate market and what that means for listed REITs?
Well, the private market is very heated in terms of capital. The U.S. is a safe haven, and there are plenty of jurisdictions around the globe, as we're seeing, that are not safe havens these days, and they know that this is a good place to park the money. So you have lots of money coming in from offshore, lots of money coming in from around the world, all different governments, different pension plans. As you saw, they just, as part of the PATH Act, they passed that qualified foreign pension plan exemption to try and put foreign pension plans on the same footing as U.S. pension plans. So there's just a lot of money chasing a finite amount of real estate. So if we're nimble in the public REITs, we can use this to our advantage as well. Because as you see, there are a lot of people on the private side that are getting money, and they're competing with us in the public REIT sector to buy properties. So when the private sector can buy it as well as the public sector, that puts more pressure on the public sector. But if we're creative, I think we'll find that that money, there's no better operator of real estate than a public real estate operator. And really, as a partner, who would you want as your partner? I mean, that'd be a great partner.
And how will the large amount of debt that's set to come due in the coming years impact the real estate investment market?
Everybody's worried about it. There's concern out there. You see a lot of people on the private side creating private debt funds to fill in the void. We're seeing more people deal with mortgage REITs now, coming back to fill in the void. And I think that there is going to be a tremendous opportunity, if you have the money, to be a lender and refinance that debt. There's a lot of it out there. And
lastly, what legal or regulatory issues are you monitoring that could have the biggest impact on the industry?
The biggest thing for the industry, there's a couple actually. The FIRPTA exemption for the pension plans that came out, qualified pension plans that came out in December as part of the Protect Americans Against Tax Hikes Act, that's the PATH Act, that's very significant. We also have the audit rules that were put in. You know, all the partnerships, I mean, all of the REITs have UPREIT partnerships down below them, and we now have to do partnership representatives for years starting in 2018. Nobody's really sure how these rules are going to work. They were passed in November of last year as part of the Budget Reconciliation Act, the Bipartisan Budget Act that was there. So we'll have to deal with that, and we'll be following that. And a big one is the tax reform proposals, because still on the President's proposals, as it has been for the past 3 or 4 years, has been repeal of like-kind exchanges. That would be disastrous for the U.S. real estate market, not just for REITs. I mean, REITs happen to hold the public real estate component of it, but it really would create a hugely chilling effect on the real estate market. And this is a very fragile economy. I said that a couple of years ago when it was a really fragile economy. But it's still pretty fragile despite the great amount of activity.
Sandy, thank you so much for your insights.
Anytime.
For more from REITWise 2016, be sure to visit REIT.com.